Yesterday we had General Growth Properties file the biggest real estate bankruptcy in U.S. history after amassing $27 billion in debt. The owner of Boston's Faneuil Hall and South Street Seaport in New York City ended a 7-month effort today to refinance its debt. We intend to emerge as a leaner company, out as a less leveraged company. Our business model remains strong. Another commercial property owner hits the dust. Is not this the next wave of bankruptcies and foreclosures?
As we predicted in the International Forecaster, and it's going to happen. There's going to be lots of them. And I'll tell you very simply what they did. They went out and got interest-only loans, and the bank gave them to them. I mean, you're buying a $10 million building? Some of them didn't put any money down at all. You know, by and large, you put 5, 10, 15, 20% down, depending upon the lender. But they're underwater. You're going to see a 70% correction in commercial real estate. And it's going to be that way for a long time.
And what's interesting, Bob, you listen to these pundits on television, and you know, they talk of, and even some of the articles on their websites, it's like, well, you know, it's just going to be business as usual, no big deal. They're just, you know, filing bankruptcy, and, you know, the consumer won't notice any change whatsoever. They don't talk about the billions of dollars that are lost.
That's right. And, you know, what's very disappointing is that the director of the company or the CEO, whoever made the statement he made, what we're doing is sound, so to speak. If it was sound, they wouldn't be bankrupt. Mm-hmm. I mean, how can you stand there and lie? I mean, it is so socially acceptable and politically acceptable to lie that it's unbelievable. Nobody tells the truth. The guy is incompetent. Otherwise, his company wouldn't have went under. The lenders are incompetent for making the loan. There was somebody in Congress, not in Congress, it's in this issue coming out tomorrow, but there's a woman who was overseeing something on the investigation of the banks and the money that went to the banks and the insurance companies and so on. And she's already said, anybody who got money, who was involved in losing all this money, should have been fired. What are we doing? Giving them bonuses instead? This is crazy. Why? Because they're all members of the Illuminati, the Council on Foreign Relations, the Trilateral Commission, the Bilderberger Group. That's why. And the public has got to find that out.
Just like GM Motors, Wagner. I mean, it took them how long for them to can him, you know? He should have been gone years ago. I mean, how hard is it, you know? And this next question is, Obama's administration aggressively pushing General Motors into bankruptcy? There's a lot of discussion on several networks regarding GM going there. Thus, the administration's economic recovery plan would give a boost to the fortunes of American Wall Street through the impoverishment of the working class. So is the administration pushing them into bankruptcy?
No, I think they just got the job of chopping them off. And look, it was decided that America's car manufacturers would be phased out in 1962. They started actively toward that end in 1980. This was all planned. Free trade, globalization, offshoring, outsourcing. We must have tariffs on goods and services. If we don't, as a nation, we're never going to survive. End of story. And somebody's got to get that into their head, and it has to happen.
This next question, those were from Ivan. This question is from Norm. I understand that the United States government cannot print money without having bonds to back that money up. The bonds were usually sold to countries like China, India, Japan. Is that true, or can the U.S. print money out of thin air?
The U.S. can print bonds out of thin air and sell them into the market anytime they please, as long as there's buyers. And when there isn't buyers or enough buyers, then the Federal Reserve, under the Federal Reserve Act, can create money out of thin air, credit it to the account of the U.S. Treasury, debit it to their account, and monetize that injection of funds into the economy, which are needed, which is a debt, which are needed by the Treasury to pay their bills.
And we just got notice that we're just about down at the end of the hour.
La, da, 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 da.
And thank you for joining us this afternoon. You're listening to Financial Survival, brought to you by Discount Gold and Silver Trading, 800-375-4188 for all your gold and silver coin needs. And, of course, if you would like a complimentary issue to the International Forecaster, you can give us a call here at 800-375-4188. And, Bob, tell us about the International Forecaster, please.
Well, the International Forecaster is about business, finance, economic, social, and political issues all over the world. It is published twice each week, Wednesday and Saturday, via email. Runs around 35 or 40 pages each time. We have a hard copy that goes out twice a month for those who are not on the Internet. And if you'd like to go look at our site, the address is theinternationalforecaster.com. The International FORECASTER.com. If you'd like to email us with a question, you can go to this address, and that is Bob, B-O-B, at INTFORECASTER.com. That's Bob at intforecaster.com.
800-375-4188 for your complimentary issue. And, of course, your gold and silver coins here at Discount Gold and Silver Trading, 1-800-375-4188. That is 800-375-4188. We got lots of questions, and hopefully we'll get to the coin questions. They'll be coming up here. But let's get through these. Folks need to know that the real benchmark of the economy to watch is the interest rate swap curve, which is tied to the pricing of corporate bonds, loans, and mortgages, and is based on LIBOR.
Well, that's why twice each day we quote LIBOR. And that's right. And the LIBOR is the interbank rate, which is charged by one bank to another in Europe. And it is also used extensively today, and has been for the last several years, in making real estate loans. And it used to be the U.S. 10, which was the most important. The 10 closed today at 2.83%. And normally you'll have a 1.25 premium on that, which would put it at like 5 1/16. Now that's a little bit higher than the rate is right now. The rate's around 4 7/8. But on the other hand, if you look at LIBOR, it's 0.45 for the 1-year paper, and it's 1.11 for the 3-month paper. So based on that, money is pretty cheap via LIBOR. And that's what they're using, and the reason they're using it is they can make more cheap loans so that people can get into homes or refinance or whatever.
The second part to his question there, it says, he says, so folks, don't be fooled by an improving U.S. Treasury yield curve, which is being touted by the Wall Street Journal and others as a sign of an improving economy. China has been buying more short-term treasuries, thereby assisting in a steepening of the yield curve, and, of course, the Fed is in there buying treasuries as well.
absolutely brilliant.
Yes.
Who sent that in?
His name is Terry.
Well, Terry, you are one smart son of a gun.
Isn't he?
That is a real good question.
So don't be fooled, folks. Question number 2, I don't see China willing to upset the strength of the U.S. dollar by buying 403 tons of IMF gold.
Repeat that, please.
He doesn't see China willing to upset the strength of the U.S. dollar by buying the IMF